Hello and welcome to the live recording. We're just going to give you an insight into how to use these candlestick patterns to enter and exit trades. Okay, I don't want you to get too worried about if you're confused or anything like that, because we are going to do a live webinar. So don't panic. Just have a go at trying to identify them for yourselves, and then when it comes to the live webinar, then you can ask as many questions as you like to try and clarify it for yourselves. Okay. So first of all, we're on the US dollar Japanese yen at the moment. Okay, let's start off by saying looking at this trade and saying, right, okay, what we've got potential entry and exit thing levels that we could be looking at a trade. So I'm going to find a point here where we can look at that in detail. Okay, so let's say for instance, let's say we want to try and get into the US dollar yen. We've got a feeling that it's going to continue up. We know that the US dollar is stronger than the yen at the moment, so we're looking for a potential buying opportunity. So the trend started from here. It's moved up to this point here. It hasn't quite had a decent pullback yet. We're using our Fibonacci's to try and depict a good pullback point. It's only pulled back, this point it only pulled back about 23%. We've got to this point here. We've stuck the Fibonacci's on there again. At this time you can see here on this candle, it's pulled back to 50%. Okay, so we're looking at this and thinking, right, okay, if we haven't taken the trade already, maybe we're a little bit dubious, maybe we're a little bit being a little bit cautious. We're looking for another signal to get in, basically. Some traders will have no problem. They'll just go, right, okay, there's my 50% level. I'll put my stop loss below my 60%, 61% there. I've got an area of support and resistance. I'll put my stop loss down at 12052. I'm going to go in for a buy. Okay, so some traders will do that. Other traders will be, oh, I don't know, I'm a little bit unsure. What if it goes against me? I need some further confirmation there, which is fine. Okay, if you want to, and this is where we start to get into the fact of finding out what sort of a trader you are, how much risk you're willing to take. And I'm not talking about percentages. I'm talking about, do I want to go boom? Okay, a big red candle there, but I don't care. It's down to my 50% level. I'm sticking with my plan. I'm in there. Bang. I've taken the buy. Okay, that might be you. Other people might go, right, God, it's a big red candle. Looks like it's going to continue down. I'm not too sure. Okay, this is where we could use those patterns to try and identify those trends, those changes in the trends, or the slowdown in the sentiment, so that we can then say, well, actually, yeah, it has slowed down. The big red candle's come to a standstill. It's hit that 50% level. Now we're starting to get signs that it's going to turn around. Okay, so and that's what we want to try and use those candlestick patterns to try and identify for us. Okay, so let's have a look at the next candle on the chart there. So we've got the big red candle hit 50%, and then we've got this candle here. This is the inverted hammer. Okay, we've got the long wick there. We've got the green body. Okay, it's characteristic of the change in trend. Okay, always appears after a declining trend line. Okay, and it's the potential of a bottom reversal. Okay, it doesn't necessarily mean there's a support level there. In this case, we've got the Fibonacci support level, which is great. And then we have the next candle there. You can see it turns green as well. It comes up, doesn't quite engulf the wick there, but it certainly engulfs the body, which is what we're looking for. So that it turns into a different situation altogether. But this is on a 4-hour chart. Okay, this is on a 4-hour chart. So what we can do here, let's go back to our big candle. If we take that through the different time zones, you can see this is on the 10th of March. Okay, so we're going to have to sort of go find that again on the chart. We're taking it down to a 30-minute chart because we want to try and react as quickly as we possibly can. Okay, so there's no point in this going, right, okay, we've hit our 50% retracement level now. We're just going to sit there and wait for that to develop, or we're going to look for a way to get into it. Well, if we want to try and find a way to get into it, we want to try and get into it as quickly as possible. Okay, so And you can see here now, this is the 50% level again. This is that same downtrend that we saw. This is that one big candle on the 4-hour chart here. Okay, you can see there straight away. You can see that we've got a hammer. Okay, has hit this point here. We've got a hammer. It's opened up the next candle. We could, in fact, what we probably would have done is, as it's opened to this next candle, you can see we've got a nice long wick there, so that's turned green. That would have been enough for me to get into the trade for a buy, okay? And I would have put my stop loss below the hammer, okay? Because that's the level of support. All right, okay. It does go sideways for a little bit, but eventually it does come up into profit, okay? And you can see there it continues up into profit until it gets to a higher level. All right. Okay. So let's go back to the 4-hour. Okay. Important that we go back to the 4-hour. So once we're in the trade and it started, it's going sideways for a bit. It's gone sideways for quite a while, as it did there on that 30-minute chart. It goes sideways for a bit. We're a little bit unsure. Okay, well, we got into the 30. We looked at it at the 30-minute chart, and it was quite noisy. Yeah, there was quite a lot of sort of candles opening on the same level, going sideways slightly. We're a little bit confused, so maybe we're starting to think, oh, I've done something wrong here. But if I then looked at the 4-hour chart and went, well, hang on a minute, on the 4-hour chart, I've actually just got this one inverted hammer. So really, my signal is stronger. And don't forget that the higher the time frame you're using, the more accurate your direction will be. So on the 4-hour chart, I'm looking at this, I'm going, well, I've definitely got this hammer signal appearing. I got in early on that 30-minute chart there, just because I didn't want to miss the trade. But I've most certainly got a hammer here. I've got the next candle is green, and the next candle is green. By this time we're way in profit on this one here. So nothing's changed. We're still using the same thing. We've had our hammer on the 30-minute. We've got our stop loss below the hammer, and we'd incorporate our recent area of support underneath the 61% retracement level, as we would do from as described in the intermediate course. And then we start to head up into profit. But then we get to a point here where we think, hang on a minute, look, we've got the green candle here. We're on the 4-minute chart. We're still on the 4-hour chart. We've got a doji appearing here, which is a neutral candle. Doesn't really indicate much. We get another green candle there on the 4-hour chart. We then get an engulfing red candle here. Okay, so at this point it's time to think, well, hang on a minute. Is this the change in trend here? We've got an engulfing red candle. Maybe it's time that we get out of this. Okay. By this point, I would have hoped you would have taken some profit anyway, on the upside. At least some sort of profit from the previous lows here. And as you can see, it goes sideways, and then it does eventually drop down. But then again, we're confronted here by another hammer where it's trying to break through, and again that turns to a green candle, and it heads up. So just going off the 4-hour chart there, you can see how we can use these candles to take trades on open trades and close trades on the direction that we want to go. In line with the fundamentals there. Okay. Again, the 30-minute, we could always use the 30-minute as to try and get in quickly, but we've got to appreciate the fact that if we're getting into these quicker, then we could be confronted with some sideways action before we finally get that leg up that we're looking for. Here again, we can see here we've got an engulfing pattern there, where this candle engulfs and it goes into 3 advancing soldiers. Quite quickly. We then get our first red candle. We get a spinning top here, which is indicating, there is a bit of a period here where uncertainty in the market. We then get an engulfing pattern here. So at this point, we'd probably take profit on this, but we've had a fairly decent sized profit. We may even take profit on this, or we wait for the next candle. The next candle comes green, and as in fact produces an engulfing pattern as well. So it's open to suggestion or how you can use these patterns, but it's a very good way of taking out or any sort of doubt that you have in your mind's eye about whether you're in the correct trade or not. And also it's very, very useful when you get to periods of profit taking, when you hit those support and resistance levels, to whether you want to actually get out of the trade, or whether you want to stay in the trade. Let's have a look at the 4-hour chart here, on the US dollar, Japanese yen at the moment. You can see where this price is now. It's come up to this previous area here of resistance and support. Now this we know would be our first profit taking area, because we always try and trade up to our previous highs, previous lows, or previous areas of support and resistance. So if we've taken a buy on this at this point here, and we've come up to this area now, which is support and resistance, we want to now establish whether we want to take profit here, or whether we should hold the trade for a little bit longer. So let's take it down to the 30-minute chart, and let's again have a look at those. And we'll be saying, okay, well, hang on a minute, we're at that point now. There's nothing there at the moment to show me that trend's slowing down. However, if my next candle opens up and I get something like an engulfing pattern, for instance, or if I get a doji showing that there's there's a change in sentiment, or if I get another one of those bearish signals, such as an evening star, or anything that's going to give, or a hanging man, or tweezer tops, something that's going to give me an indication that this may well be reversing, then that's when I'm going to think, well, okay, I'm either going to take a percentage of profit out, or I'm going to take all my profit out. I wait for it to pull back, and then maybe look for the next pattern to get back in again. Okay, this is how we can use those patterns to our advantage to take profit, and obviously to look to get back into those trades. So I hope this has helped. We will be doing a live webinar on this as well, but for now, go back and have a look at your charts and see if you can identify these patterns, and use the different time frames so that you can see how they change between the 30-minute and the 4-hour. Okay, thanks for watching.